Hello, this is Richard Pears from Finextra TV in our Unplugged series, and I'm delighted today to be joined by Amy Clarke. Amy, co-founder, Chief Impact Officer of Tribe Capital. Thanks for joining us today.
Oh, thank you. Thank you very much, Richard.
What does this mean, this Chief Impact Officer? You know, I know what a CIO is. What does it mean for you?
Yeah, so we have two chief impact officers. We have two CIOs even at Tribe. We have my role, which is the Chief Impact Officer, and then we have the very traditional Chief Investment Officer, which is my colleague Fred. And Tribe, effectively, Tribe Impact Capital, we tend to refer to ourselves as Tribe, is a dedicated pure play impact wealth manager. So what do I mean by that? We take private client capital, institutional capital, and we manage it for long-term sustainable impact in society. So we tackle the core social, environmental, and economic issues that are out there through an investment thesis that enables our clients to do well for themselves and to do good at the same time as well. So this is beyond ESG, it's beyond ethical investing, it's intentional investing seeking to create that impact. So we're very proactive in seeking out businesses and opportunities that we think have the solutions to the problems that we face as a global society and local societies, but also are managing themselves through the lens of effective environmental, social, and governance-related policies and practices, so that you get this 360-degree view of a business from its operations to its core product and service, and you can then get an idea as to whether or not this business is additive in terms of society, it's adding real value, and therefore it's likely to be future fit. So given everything that we now know that's happening, is this business likely to be a success? My role very much in that is to anchor the business into understanding what creates impact, what is impactful, how do we measure it, how do we report it. Fred's role is very much the more traditional Chief Investment Officer, where he's looking at the investments through the lens of, is this likely to financially perform? The two streams are actually very, that's the duality in the business, but the two streams run concurrently. So what we often tend to find is Fred and I are speaking exactly the same language in different tongues.
Yeah, I know what you mean. So give us an example. I mean, I think that's really concise and I get it, but give us an example of within the portfolio, you know, what that might be, or a particular company that is, if you will, the ethos of that spirit.
Yeah, so for example, if I use technology, we look at technology companies partly because so much of the future of work depends on technology integration, but also so much of the delivery of the UN Sustainable Development Goals, which is our North Star as a business. It's what we anchor the business in terms of the safe space the Sustainable Development Goals codifies and creates for us. That's where we're aiming towards. You know, 2/3 of those 169 targets that sit behind the UN Sustainable Development Goals can be bolstered by technology. So we're very interested in tech and the tech, you know, play within that. Specifically, you know, thinking about the fourth industrial revolution, things, for example, like AI, superintelligence, machine learning, blockchain, that's an interesting one, you know, 5G, even things like, you know, drones. Now, we offer solutions both in the public markets and in the private markets. And in the public markets, we don't, interestingly, have exposure to the FANG stocks. We're looking at what we would term far less controversial businesses, because with a lot of the FANG stocks you're picking up, as you will well know, Richard, given your background, a lot of issues around data security and privacy as well. And we feel that a lot of those companies really don't have a handle on that. So it's not to say that we wouldn't necessarily invest in FANG stocks if we had the confidence that they were able to manage those businesses and that they were truly additive. But there are so many other interesting technology opportunities out there.
And do you mean technology in the wider lens of technology, yes, not just ICT, but yeah.
Exactly. So things, for example, like medtech, edtech, agri-tech. You know, there are some really interesting opportunities out there that are anchored in us trying to deliver the targets that have been set in the SDGs, but again, very much supported by the work that's been going on through the fourth industrial revolution as well, and saying, you know, how do we move forward, and how does how does humanity embrace technology in a way that is material and additive and sensitive to the potential unintended consequences that technology can often raise and bring with it as well. So medtech and
yes, a lovely segue, because I was thinking as you were talking, I sort of subscribe to that sort of way of thinking. But of course, if you are, I don't know, putting sensors in the fields to measure the agrotech, maybe the agrotech, who knows? But what you're doing is you're obviously putting a carbon footprint potentially with the technology in there. You've got perhaps some data security challenges. You might have some employment changes because people aren't necessarily needed to do that. I mean, it's a very complex world. How do you, when you say I'm genuinely going to make an impact, how do you weigh up all of these pros and cons?
Yeah, so you're looking effectively at the net balance in terms of the net balance of impact that any one company will have, and that can often be rooted in science. So it can be rooted in data, understanding what those impacts lead to, the negative externalities and the positive externalities that can be created. Often, you are looking at the scientific data and or the sort of the evidential data that is in the marketplace to get that view. And sometimes you are literally having to use qualitative data, so the stories and intuition, your own learning, your own knowledge, your own experience, to understand whether or not that business truly is going to be, as I said earlier, one of these future fit businesses. And I think that's why it's so important in finance that you're bringing together sort of the investment specialists and not the ESG, absolutely the ESG analysts, but you can't stop at ESG analysts. You need to bring on the individuals who've been frontline in sustainability, who've been frontline in addressing these thematic issues. You need to have them in your team as well, anchoring your team so that you absolutely understand where to invest and where those lines are really in terms of net negative, net neutral, sort of do no harm, and then net positive. So we're always trying to tilt as much as we can, obviously, towards the net positive. Occasionally, especially if you use third-party fund managers, so obviously when we're all looking to diversify the portfolios we have, we might use a third-party fund manager. Occasionally you'll be picking up companies that you wouldn't necessarily, if you were going in directly yourselves, think were particularly material or additive or even intentional, but they are sort of do no harm. So you can tolerate those as well. But it's a really complex world because unlike financial information, which you will be very familiar with, given your background, impact information, there's not one single kind of repository. It's not like we have a Bloomberg for impact data. We don't. Yeah. Could we ever move to having sort of like a Bloomberg for impact data? It's a huge ask given the complexity of all of the issues that we are facing, and then all of the targets that sit underneath that, and then the metrics. Crikey, it would be huge. But you're having to. You have issues then around the quality of data, the paucity of data, the different ways people report, how you aggregate that, how you attribute it. It is a challenge. It's difficult. It's very, very difficult, and it has been a challenge and an issue for as long as I have been doing sustainability, which is it's a long time. I won't tell you how long, but it's a long time.
And to you, I'm sure it can't be that long. But if you look at the technologies that are available, obviously, the machine learning and artificial intelligence and so forth. On one level, it holds out an opportunity to manage huge scales of data and tag it, normalize it, and then see obviously the signal from the noise and that combines much of that diversity of data you just spoke about. But on the other side of the coin, the ethics of AI and that whole debate. How do you use that kind of technology in what you guys do, or is it down to, as you say, the mix of human experience?
Yeah, so we use technology, and obviously we use as much sort of machine learning as we can. I'm not going to say it's AI. We use automation and digitization to look at the sort of the trends within the data that we have. But we use human eye over the top of that, because I think one of the issues potentially with kind of technology at large, and especially if you then sort of dive down into blockchain, is you run the risk of becoming too binary. Everything becomes kind of a 1 or a 0. And in this very, very complex world of impact, you often need to really be able to nuance that data and understand whether or not actually it really is a bad thing, contextualizing it in, sort of potentially in the bigger picture. So we at the moment feel that technology is hugely additive to finance, massively additive to finance, and its future is really bright in terms of what it's going to be enable us to do. But the complexity of the issues that we face means that we do have to have some level of human engagement with it. Yeah, and I think also, when you then look at the coding, a lot of the coding that's going on out there as well, and I hate to say this, and I think, things are changing. I know, for example, we were talking about Microsoft, and we have spoken about Microsoft outside of this conversation. There's a huge amount of work going on in technology more broadly, especially in coding and gaming, to bring in more diversity. But at the moment, the majority of the coding that's going on is kind of younger white men. Now, how able are they to nuance the different cultures that are at play, in the way that different people behave and different people think, different cultural regulations, etc. You need to have that diversity. So we are huge fans of data. We recognise, obviously, some of the trade-offs that come with that, as you said, but we also do believe as well that we are in a place at the moment in investment history and in human history where we still need that human kind of management over the top of it.
That'll always be the case, and I think that diversification is a long way from, when I started at Microsoft, it was very much you were joking, guys in blue shirts that look like the founders, and it is a much more diverse place now, as it is at Google and AWS and everywhere else. But the point is still well made. When you look at impact, and you have somebody else saying, well, what about transition? The transition pathway initiative. How do you sort of reconcile the fact that we need some of these bad things, but we want to help people, go towards a better place, and obviously support economies and jobs on the way? Or do you say, well, that's the role of somebody else. We're clear about what we're doing, and it's only good, if you will?
Well, I mean, for us, it's very easy. We are a smaller organisation. We're only we're coming up in November this year. We'll be 4 years old. If you are going to invest in an organisation on the basis of transition, you need to have some level of influence in order to create that momentum. A, to get the engagement, and then B, to kind of create the momentum. And we are some way off that, maybe in time, but hopefully in time we won't require. The world won't require us to do that. So our view is absolutely we need these investment houses to be going into those companies who are truly intentional in terms of transitioning their business, and support them to do that. Because what we cannot afford to have is a disorderly exit from some of the businesses that we know at the moment actually are providing some level of product that the society genuinely needs, for example, like energy. We can't just have a disorderly exit. We need a very fast, very, 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 very considered and intentional exit out of the very, industries that are causing the problems. So we need those investment houses to be going in and helping them transition really, really quickly. Our view is there's possibly a little bit too much money caught up maybe at the moment in some of these transition companies, at the detriment of the companies in the market with the solutions. So we view ourselves as in our investment style as being sort of solutions oriented. We want to give our clients the opportunity, as I said, to invest in these businesses that are future fit, that are either sort of future fit now and well on their way, or who are potentially and evidentially as well, that's the really important part, evidentially starting to pivot their businesses. But we need to see that evidence before we go in.
So that's a clear distinction, isn't it? It's that institutional power with ability, big pension funds, etc., to sort of have that influence. They can focus there. You're focused on very much the sort of building out solutions. Tell me, you've mentioned a few times Future Fit, and I think we know Future Fit Foundation, but maybe not everybody does. Tell me a little bit about why you use that word, and what Future Fit Foundation does within the context of what you do, if you can.
Yeah, so if we just focus on the term future fit, the UN Sustainable Development Goal framework is all about future fitness. It's the future fitness of the planet. It's the future fitness of society. It's how do we start to embrace this notion that in a finite world we cannot have infinite consumption, for example, and infinite growth. So future fit is this notion that we have to operate within the parameters that the Sustainable Development Goals, so within that ecological ceiling, respecting nature's carrying capacity, but then also within that social foundation and ensuring that we bring everyone with us so we don't leave anybody behind. So this almost this sort of social safety net, for want of a better expression, but wrapped around that are sort of the behaviours, the cultural, the legal landscapes needed to ensure that all that actually works and is cohesive. The Future Fit Foundation and the Future Fit benchmark, which was set up by Jeff and Martin, is effectively a future-focused management tool and reporting tool that allows companies to focus on that 2030 agenda, so the SDG agenda, focus on that and effectively almost reverse engineer the strategy that they need to develop to get to 2030 and to be future fit and to be working within those parameters that have been set. From an investor point of view, it's really important for us because most of the information that we ever deal with as investors is retrospective, it's historical. And with the best will in the world, it doesn't give us a good idea necessarily as to future intention. You can often start to see trends that are coming through with companies, which is fantastic. But you know, we need to have that kind of forward view to be able to say, okay, well, look, you've made incremental progress in the last 2 to 3 years. There's a huge step up that you need to create to get to this 2030. How are you doing that and where are you doing that? And I think the beauty about the management framework is it gives companies an idea of what it is that they need to do, and the reporting template then obviously gives it an anchor for investors. We can then say, okay, we can see what you're doing, and they have obviously the break-even goals. And then obviously the future fit goals as well. So they're really additive metrics and goals that companies can choose. So for us, and I would never speak on behalf of, for example, Webb or Hermes, who also sit on the on the investor development board with us. We're all in sort of violent agreement in many ways. It's a unique opportunity for us to work with businesses to help them understand what we're looking for a start, for them to help us understand what they're able to report now versus what they might be able to report in the future.
Fantastic. That's a wonderful question, and you know, it leads me into, you know, we're in this COVID world. We've managed to go this long without mentioning it, but obviously the question that everybody talks about in our sort of circles really broadly is, if all of this, you know, fiscal stimulus is being pumped in, obviously to get businesses going, to get people back to work, will there be any constraints on it in terms of how it's applied within the context of the SDGs and the climate crisis? Or is it just going to be, you know, the priority is, you know, building up businesses and roles as quickly as possible, no constraints? How do you see sort of, you know, government money, private money? How do you see this working within the context of what you've been discussing, SDGs and future fitness?
So it's really interesting, and obviously in the eye of the storm, and I think, you know, we're still very much in the eye of the storm. You know, nobody knows what the future holds, and it's very unnerving for everybody. There is a unique opportunity that comes from this. You know, given the absolute trauma that everybody is suffering at the moment globally, you know, there is a unique opportunity for us to say right here, right now, how did we get here? What created this? And how do we respond to it, not just now in the next 2 to 3 months or the next 12 months, but in the next 5 to 10 years? So almost taking that future fit kind of benchmark approach and saying, you know, what does the future look like, and how do we then manage that, and how do we reverse engineer to ensure that, you know, if this happens again, we're far better prepared than we have been, but we also dampen down the likelihood of it happening because we understood where the last one came from. And I think it's really, really interesting when you then look at the role of finance. So we've seen, for example, with governments, we've seen Denmark, Poland, France and Argentina all link bailout packages, business bailout packages, to the tax agenda. So looking at those companies who are abusing either the tax kind of, you know, the global tax infrastructure, and or those who have potentially been buying back shares as well. So each kind of bailout package in each of those countries that has been crafted is actually quite similar, but they've got kind of nuances on it. So I think we're starting to see, for example, the issue of tax coming up as a big issue for the future. And I think most of us would agree that the global tax environment does need to change. Definitely needs to change. So that's interesting. You know, we've seen governments move on that. We've also seen France and Austria. Well, France specifically has moved with the KLM Air France bailout, the €7 billion bailout there, to anchor that in low carbon transition. Effectively,
right.
Yeah, less metrics, more clauses. So Air France in France is no longer allowed to sell tickets for any destination from Paris within France that can be reached by train in less than 2.5 hours.
Good Lord, I didn't realise.
Yeah, so really interesting. They can only sell tickets if the individual is connecting with another flight going on somewhere else.
Right.
Now, that's I mean, it's an incredible move, an absolutely incredible move.
Yeah.
And what that does is send a very, very clear message that you know, we cannot live in a world where we continue to privatize the profits and socialize the losses.
Yeah.
Losses being more than just financial, the losses being, you know, social, the losses being environmental. So we're starting to see some governments move into that space. Those governments, and for example, the EU as well, has been very, very clear that there is a role of private sector alongside that, especially private finance. We saw that with just before the sort of the COVID crisis really sort of took hold in sort of the Western world. We saw, you know, the call for private finance specifically to really step up and have a louder voice at the COP summit. So COP26, as we know, has been delayed, but there's a big move there to get much more private finance voices there, more commitments, more engagement, really understand what private-public partnerships look like. I think as we look forward, we're going to really start to see the rise of more impact-driven and sustainability-driven public-private partnerships. And the role in government in potentially de-risking certain financial opportunities to crowdsource in other forms of capital as well. You know, DFID, for example, has done bits and bobs of that with, you know, international aid over the years. I think we'll start to see more of that coming through. I hope we'll see more of that coming through. So, I mean, I'm under no illusion at the moment. You know, I've mentioned 4 countries, and I'm sure by the time we finish this, and well, I hope by the time we finish this and it's out in the market, there'll have been more that have come through.
Yeah.
But it's 4 out of 193 that signed the UN SDGs and ratified the UN SDGs. You know, so it's not a huge number at the moment. We absolutely need multilateralism moving forward. We need that sense of international cooperation. Transboundary problems require transboundary solutions. And COVID has actually, if anything, it has really got people focused on this need for international collaboration and partnership. Viruses don't respect boundaries. Climate change does not respect boundaries. And
you're in a sort of nationalist, populist kind of environment politically. How does, you know, let's think of solutions. How do you actually sort of get to that multilateralism, that, you know, that benefit of globalism, if you will, within that political context?
So it's interesting. So we saw what's today? Totally losing track of the days, Richard. It's a very strange
Thursday, isn't it?
Thursday, thank you.
Yeah. This may be coming out on a Tuesday, you know, sort of.
I was going to say, I think this whole, you know, everyone's routines being so completely disrupted. I don't think anyone knows what day it is at the moment.
Yeah.
But I think it was the back end of last week. We saw, might have even been early this week actually, but we saw you know, this new global partnership looking at COVID responses and looking at then pandemics and looking at how we tackle pandemics going forward and how we collaborate on vaccines, how we collaborate on responses, etc. You know, there were a few European countries in there. We had Norway in there as well. I think the UK is in there as well. You know, it's interesting how these big sort of social and environmental crises can galvanize political goodwill and the need for us to start to recognize that, you know, everybody's saying at the moment, for example, with COVID, you know, we're all in the same boat. We are not all in the same boat. Right. We are all in the same storm, but some of us are very lucky because we're in boats. some are in canoes, some have no oars, and some are literally drifting on, hanging onto driftwood for their lives.
Yeah, absolutely.
So we might all be in the same storm, but the vessels that we're in very, 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 they're very variable. And as a result, it brings into stark contrast, the inequalities and the iniquities that are out in society, as well as then getting everybody to sit back and say, where's this come from? Conspiracy theorists to one side, where has this come from? So that's why I think, we have this unique opportunity now, politically, commercially, from a citizenship point of view, to really sit back and reflect on what learnings, when we're ready, because it is so traumatic, for so many people, what learnings will we take from this, and how will we ensure that we become better versions of ourselves?
Yes.
Ensure that this doesn't happen again, and that is starting to happen. I think politically, we've seen that starting to happen.
Well, when we first met, it was the first time I heard the phrase "build back better," and then it was used in the BBC yesterday. Hopefully, that's a phrase that we can hang on to. I know you've got to go to another call. I hope we can pick this up and carry it on another day. But for now, thank you so much. Wonderful insights.
No, thank you, Richard. It's been really good fun.
Thanks a lot. Bye.